Mihir Vora joins us and let's connect with him. Mihir, good morning. Thank you for joining us. What are you doing? Are you using the residual cash which you have? Have you started buying? Is it time to buy the panic? Mihir Vora.
Hi, good morning. Too early to start deploying. Not that we have too much in any case. We typically don't keep very high cash levels. But the point is that in general, we are still domestic focused. So when we scan the portfolio and try to see whether there are stocks which we would like to sell, frankly, I can't really find too many stocks. So we are pretty much in a kind of a not very high activity mode, I would say.
Good morning. This is Shrishti also joining in. Not very active right now, but here eventually in the medium term, the markets will follow earnings because there's a lot of uncertainty in the near term at least. But post this dust settles in, help us understand where do you see the earnings to support any sector that you wish to flag off at this point in time?
Certainly. So we've always been more positive on the domestic story because clearly India was going to anyway grow faster than the rest of the world at 6.5. Obviously, those 6.5 might go down to 6 now because of the major uncertainty. But we will stick to the domestic theme, both the investments theme, which I think should happen in any case over the long term, and the financials theme, which we believe that offers good value. And I think if you step back and see the Indian banks and large NBFCs, they are amongst the safest in the world. The only thing missing was growth, which we were hoping that will happen, probably get postponed by a quarter or so, but still offers really good value. So I think all those calls about banks, large NBFCs, domestic cyclicals, and a little bit of domestic discretionary consumption, I think those will stay. I don't think we are making too many changes to the portfolio.
Make a very bullish pitch. And this time I'll maybe surprise both Mihir and Dinshaw. They both are compulsive bulls, right? Long term. So I'll say the following. Never waste a crisis. We've seen this kind of a fall only twice in the century. 2008 and 2020. One was not man-made, the second was happened because of excesses. This is something which can be contained. Second, for what does US give India? US gives liquidity to India, right? That as it is has not been very rampant, and with dollar coming down, money will come to India. If interest rates they come down, that's good news for India because interest rates will come down like Dinshaw said. And third, commodity prices if they come down, which is crude in this case, that's also great for India. So I'm being bullish not for the sake of being bullish, but I guess our fellow guest would agree here, right? Mir, आपकी line बोल रहा हूँ देखो मैं.
No, and the point is good that you brought up 2008. This actually is opposite of 2008. You know, in a normal crisis or normal in the sense the crisis that we've seen in the past, you would see a flight to safety, which is the US dollar, US assets. This time, nobody's going to buy US dollar assets as a flight to safety. 70% of the benchmark for global portfolio allocators or equity benchmarks is US. And if even a little bit of that starts shifting to the rest of the world, I think it was already beginning to, by the way. Europe was hitting 52 weeks highs before all this happened. There was money flowing into China because of the Chinese tech surprises. So even if the little bit of that 70% wants to get reallocated, India is a very small market. We just need 10, 20, 30 billion dollars out of those trillions of dollars, and we are done. So I think there's no playbook for this. And as you rightly mentioned, it's a self-inflicted goal by the US. My guess is that if this crisis continues, then we still go back to the old playbook of easy liquidity, fiscal stimulus by the government, all linked to the global, all linked to the domestic segments, and that's what we are betting for.
Okay. Dinshaw, thank you very much. I know you've got a very tight schedule ahead, but you accommodated this request, so thank you very much. Meera, I've got a couple of follow-up questions. In the past, we've spoken about manufacturing, we've spoken about defense, we've spoken about EMS, we've spoken about India becoming the manufacturing going through this renaissance moment. Because of this whole tariff thing, will this entire manufacturing space get rebooted? Because that's one space where, in a sense, we saw nothing but a gold rush in last couple of years.
See, as far as sectors like defense or railways are concerned, a lot of it was anyway going to be manufactured in India and sold in India. Defense, we were not anyway looking to export to the US, so frankly, that's not a issue. So the defense theme does not change. The rest of the stuff like industrials, manufacturing for self-consumption, that stays. Some of the items like semiconductors, anyway, we wanted import substitution. So a lot of the first phase of EMS, etc., was more of import substitution, trying to reduce the huge electronics goods deficit that we had, that we do have currently, and that's what. Yeah, some of the ambitious ones which we are looking to export maybe 3, 4, 5 years down the line, that will have to be rethought. But the immediate 3, 4 years was more about local manufacturing, local capacity creation.
All right, Mihir, but also help us with your take on the healthcare basket, because we remember that within healthcare, you believe that maybe it's time to look out for some of the global generics, CDMO plays, and even diagnostic companies were some of the themes that you were liking before. But given this global reset, and now there is a lot of uncertainty, or rather there's a likelihood that tariff can be implemented on the pharma space as well. Well, of course, we'll wait out for clarity. But any adjustments you would like to make, or help us with your take on the pharma space?
So pharma, we look at healthcare overall. So in healthcare, we had hospitals, we have diagnostics, and then we have the pharmaceuticals, which include CDMO as well as the generics. So our exposure was more to CDMO and a couple of names which are more linked to new molecules rather than manufacturing per se. And the rest of it was CDMO. We did not have too much exposure to the generics per se, because we thought that while generics the pricing seems to have stabilized, but this was not the fastest growing segment for us. CDMO was looking more like it. I think the CDMO space requires a lot of labor intensive, a lot of scientists, a lot of customization, a lot of ability to create things fast and turn around fast, which countries like India and China can do much cheaper. And you don't want to really stifle innovation. So I think while generics may get impacted, which again I'm very doubtful about, because that impacts the lower class and the middle class the most even in the US. But I think the CDMO space should not be that impacted, frankly speaking, because that is really difficult to get those volumes of scientists and that kind of capacity to turn around small quantities, small volume batches of stuff, and offer options.
Gentlemen, appreciate your time. Thank you for joining us. We've thanked Dinshaw and Mihir once again. Thank you for joining us. Crude.
If you like this video, then like, share and subscribe to ET Now.